Hello everybody, Brian here. We are now 10 p.m. April 25th. Let's talk about where things are going. First, we know we've got a tough market out there. If you want to preserve your wealth from a variety of government regulation, taxation, crypto, things are changing very radically over the last few months. If you want to learn how to do it, get over to quantlabs.net/banking, and we've got a 2-hour video waiting for you. Very valid. It's even more valid now. And let's get to what I want to show. All right, that's what I was referring to, quantlabs.net/banking. Woo, okay, all right. So let's go over to the Yahoo Finance thing. It's been read. I got an alert last night how deep Asia was tanking, Hong Kong specifically, the Hang Seng, and look how far down we are. 1%. This is with the Fed. Okay, when the Fed starts talking, the clowns they are, where first they say inflation's transitory for nearly a year. Now they get desperate and look at the effects of it because they don't properly manage their balance sheet for the Federal Reserve. It's a clown show, and looking at it, they never factor in this $30 trillion debt for the U.S. That's why inflation's moving up. Nothing else. Nothing else is doing it. No matter what you read, get your economics 101 books out. Okay. So, what do we have? How do we preserve our wealth? Well, here we are able to do it once again. You know, what I focus on is generating trading baskets. Now, this one's a very unique one. We could see here in blue, that's my most recent trading basket, okay? So here, you've got a negative return of only 2% in the markets. You can see how volatile the price is. No matter what the market does, S&P 500 and the like, the downward pressure is too much because of what the Fed has to do. Unless they want the U.S. economy to implode faster. They're just delaying the inevitable, really. Anyways, I could go on about the political end of it, but whatever. And then here in blue, you've got the 38% return, 38% on a compound annual growth rate. That's pretty strong, and you can see how it's accelerated since March. As things get really, I'll say, desperation for the U.S. economy and global economy. But there's other economies that are doing really well. I've started with 16, and I whittle it down to 4 currencies. 4, that's it. And out of that, we've got all Asian, not Europe. I started with Euro, and it's all negative. So that's the kind of dumpster fire the Euro and the EC or the EU has become. Australia's doing okay, but Australia's or Asia's really starting to not outperform, but doing better, and you can clearly see that here. Okay, so when you look at the returns on an annual basis, there's 1, 2, 3, 4 months of negative returns over the last year with us. They're not doing too bad over the last 2 months, and this is the key here. Because of the desperation that the Western governments are in, with maybe the exception of Australia and New Zealand, they're doing better along here. What I'm using is a portfolio optimizer used by industry. It's been confirmed a few years ago. I've tweaked it to be even better, and this is one of the weakest outlooks using 38%. But the thing is that on a conservative basis, if you knew the mix of what to have to get this kind of performance, to ride out the poor performance out there in the markets, you would be kind of shocked. It's mainstream stuff. I mean, it's not like wild currencies, okay? I'm right now using Oanda as my data source, and I'm hoping to dump Oanda over the years, using the same concept what I'm using to generate these baskets. using interactive brokers once I get it all set up and transfer more money out of my crypto because, well, crypto's just not performing. I've talked about it numerous times, including tonight's webinar. So, as I said a few weeks ago, I'm wanting to have one view of the market now and combine the crypto as well. But the crypto is just not performing. It's been very flat. And when people get excited on an upswing for Bitcoin or Ethereum, 2 days later it just drops. It's like this, the S&P, where it's just so super volatile. And I'll tell you what the professional asset managers or portfolio wealth managers, what they're looking for is this kind of performance in two things. Low volatility. Okay, I've already hinted at what this big concentration is a while back, as well as low volatility, and it's not correlated to a lot. But because the performance of Euro is pretty horrible, including Scandinavia, it's not as performing as well as it used to. As I said, Australia is okay. I think Canada has a potential, but because of the dictator that we have, that's pretty well over the years. He's been in power for 6 years. He's pretty well destroyed international confidence, the whole Canadian dollar, okay? And the US dollar's pretty strong, but from what I'm seeing, this is hot capital flow. This is what I look for. I'm recommending people do not do day trading right now. It's way too volatile, but it's okay to do calibrating daily and holds and just run a portfolio optimizer like what I've got to be able to stabilize your returns, not just get that, but be able to accelerate your returns. You can see here, this particular one's our weakest one, and you can see it just outpaces the S&P. So a lot of people will have most of their capital, most of their portfolio where the yellow line is. And it's safe, it's stable, but there's no long-term performance, especially over the last 2 months. You can clearly see it there. Now, again, this is mainstream stuff. And a lot of the asset managers out there, the ones that I know in banks, large banks, the ones that I know personally are in the top 5 largest holders in their bank, and they are managing a lot of money in the hundreds of millions of dollars, and their performance is lackluster. But here you see what we're seeing here, and it's not because of crypto. Okay, crypto's like this now. Crypto's so built around relationship around now either people say the NASDAQ and the US dollar, and yes, the US when the US dollar is strong, which it's been, crypto suffers. So we have to look for consistent performance there. There's like 1 or 2 crypto coins doing really extremely well, and each one has its own story and why it's doing well for a hodl. It's been like that for the last month, and I've put up videos on that. So again, this is what we're looking for, and once it transfer a good chunk of my capital into interactive brokers, yeah, it's just one view. And if with that view, I'll include the Bitcoin and the Ethereum, and that's all going to be on CME. And if the CME, as I said, will start adding in other alternative coins, I'll watch them. But one of them I can watch is the grayscale, or no, gray. I can't remember. Whatever it is, I put them up, and yeah, that's where I'm going to trade through, and with the ETFs. And the other thing I have to mention is with these trading baskets, you either trade currencies or ETF. I don't know why you would really want to put a lot of focus on futures and options right now. They're not, again, they're all super volatile, and the futures data same. If you trade it live, you have a problem there with basically with volatility, the margin requirements. ETFs doesn't have any of that. And it's just like trading a stock from the definition of interactive broker support. So that's the easier way to trade it. And you want to trade ETFs, lowest fees. That's why, how Vanguard's now what? I think it's a $9 trillion asset manager, and then BlackRock's at 10 trillion. It's because of the ETFs. They're easier to manage, and that's what people want. So again, if you want to know more, what I would recommend, go over to quantlabs.net/banking. Okay, this 2-hour video can help you understand how to preserve wealth, and it's outside the system, outside the traditional. And yeah, it's I've got people registering quite a bit now for this, and that's all cool. And we'll leave it at that. Thanks for watching, and hopefully just a reminder, get on the new server. This is one of the reasons why you want to join this if you're on my current old list on a server service called Clavio. We're moving it over to Aweber, and over the next couple of weeks I'll be turning it off or deleting, well, basically closing it. So if you're not over to the new one at Aweber, you will no longer get emails from me, and that's going to affect quite a few people and all that. Okay, so we'll leave it at that, and thanks for watching. Talk to you later.